All right. Welcome back to another episode of Paladin Financial Talk. I'm your host, Nikki Foley, and I am joined by Mr. Tony Shore today. But not just Tony Shore. We have the wonderful Mr. Jay Dacey with us, who is a recurring guest now, and he's from Jay Dacey Mortgage. So welcome to both of you.
Thanks for having
Great
me.
to be here. Yeah, Jay, great to have you on the show once again. Another huge get for Nikki.
Of course.
She brings on the best guests, and our listeners and viewers loved when you've been on the show before. So this is great. You always bring some great information about what's going on out there.
Yeah, we'll do more of that today.
That sounds great.
Well, fantastic. So, Jay, give us as we get started. First of all, it's the beginning of 2025. And so we thought we'd start this month with just some really, I don't know if we're going to say hard hitting, but
Yeah.
let's get to the point of what's going on right now in our world. And so, with that, give our listeners just 3 things that you think they'll take away from the show today.
Sure. Number one is, why we believe that interest rates might finally come down a little bit and why that is. Number two, why rising unemployment, which we think will be the reason for rates coming down, will not cause a housing crash. And last but not least, what that means to buyers, sellers, and renters and the listeners that are out there today.
I think
Sure.
we have captured their attention. I'm looking forward
Yeah.
to this one. Everybody wants to hear a little bit about real estate. And in fact, Jay, I don't know that I've actually told you this, but when we talk about real estate, it's in fact one of our higher number of listeners, and it performs very well on social media. So we're just going to hit them with all the things that they want to hear about
All right,
today.
let's do it.
All right. So also I have to throw one more thing. Jay uses the, I don't know, terminology, slogan, whatever, date the rate, marry the home. Is that what it is? Date the rate, marry the home.
Yeah.
And I use that so often. And so if, all the listeners out there, as people are talking about whether you're going to buy a home, what do we do? I think Jay is going to give us some insight as
Yep.
to what the year looks like. But your response can be in the middle of the party, date the rate, marry the home. You're
Exactly.
that's the story. Okay. So Jay, lead us where you want to go. Tell us a little bit about the market and what do you think, what do you think's coming here?
Sure. So there's, interest rates are driven by 2 things, and it's not necessarily the Federal Reserve. It's more so unemployment and inflation. And so on the inflation piece, as inflation rose in 21, 22, 23, that's ultimately what caused interest rates to go up. Was inflation was out of control. Fortunately, it's slowed down a little bit, and it's back in that 2.5% range. The Fed's goal is to get it to 2% even. Whether we get there or not isn't super important, as long as we don't go up again. So if we stay in that mid low 2 range, we'll be in great shape. Inflation wise, unemployment wise, we need unemployment to go up a little bit, and that's going to cause interest rates to come down. And that's what our forecast is based on, is rising unemployment.
Okay. So pros and cons that go along with that, but tell us about the home side of things. Like what are we expecting to see?
For the housing market, if unemployment does rise, which we think it will, that's not going to create a housing crash. There's so much built up demand that's out there. 50% of people 18 to 35 still live at home.
Hmm.
And not only do they want to get out, but I think mom and dad want a lot of them to get out too. So there's just an incredible built up of buyer demand, and there's just not enough new construction to satisfy that. So even if people unfortunately might lose their job, if they have to lose their house as well, it's not going to be a foreclosure. It's going to be a clean listing, and there's ample buyers out there to make that happen.
Okay, fantastic. I was with a client the other day, and she was telling me a story about her family and how a 60-year-old individual is living with their parents right now, not because they want to, because that is what has happened over the years. But we were talking about the concept of so many people live at home,
Yeah.
and it's this is just becoming the norm. So maybe this will impact that as well.
It is.
The other thing that I seem to see, and you can speak to this or not, is so many people, if they want to get into a home, it's about who you know and getting before it ever gets to market. That's how people are buying their homes these days.
Yeah, it's super helpful to work with an agent that's very well connected. If it's, if there's a specific neighborhood you want to get into, that's a big part of it. Is some neighborhoods have, Facebook groups, etc. But a lot of, we live on Lake Owasso and Roseville, and pretty much most of the neighborhood knows who's going to be selling and when and why.
Yep.
And so a lot of the homes on our lake get sold before they even hit the market.
Okay. And so if you're somebody that follows Edina Realty or Zillow on a regular basis, you don't see much movement because of what's happening there. You don't see much new coming on. And so tell me, do you think that this is going to continue, what you just described there? should we anticipate that continuing for the next 3 months, 6 months, or will we see more houses coming into the market, or what's your thoughts on that?
Seasonally we always do.
Yeah.
So in Minnesota right now, it's not super nice outside. So if you're selling a house in January, it's probably because of a divorce situation, a death in the family, a job relocation. Something pretty drastic has to cause you to want to list your house in January as opposed to April or May when most of the inventory hits.
Sure.
The realtors, I'm not sure why they have this thing, but a lot of real estate agents tell potential listings, wait until after the Super Bowl. Like that's always like the catchphrase is wait until after the Super Bowl until to list your house. In our office, for 20 plus years, the day that like the snow melts for the last time, even though the grass is still brown, that is the one day of the year where our phone just like starts ringing off the hook and people look outside and it's like, the snow's gone. We should probably go out and look for a house this year.
How about that? Okay,
Wow.
so we know that spring becomes more houses coming on the market.
Mhm.
Do you think this trend, though, of where they have to like know somebody, know the right realtor, know the right person in a neighborhood, do you think that's going to continue?
It definitely helps. And every seller situation is somewhat different. Some of them need to sell their house to be able to afford the next one. Some don't. So I think if I was a listing agent and my client needed to have their house sold before they could buy, it's kind of like a chicken or the egg thing. Is if you're wanting to move up, but you have to sell your house, you go out and find the house you love, but you have to be contingent on the sale. It's kind of like chicken or the egg.
Yeah.
But you don't want to list your house first, get it sold, and then be stuck somewhere in between for a few months waiting for that right house to come on the market. So I think a really aggressive approach for agents on both the buy and sell side would be to try and identify the people that are planning to move up that need to also sell and try and get those deals done off market and with flexible closing dates, because 50% of the buyers are living at home with their parents. So they have a lot of flexibility on their timing.
Yeah.
So I think would be a big cause of that trend to be continuing.
Okay, that was good. That was good. Okay, so what are we expecting from a rates perspective? And just kind of take us where you want to go with this conversation.
Yeah. So, I had a couple key points here. There's a lot of big companies that are closing a lot of stores, which will cause a lot of job growth. And so I wrote down that Walgreens, they're closing 1,200 stores this year, and CVS is closing 900 stores. Like that's
Wow.
a lot of jobs being lost. And there's a bunch of other bigger companies. Big Lots, I believe, is shutting down quite a few stores. So there's just going to be a lot of job loss. And one of the things that has kept unemployment propped up and the Fed from moving too fast on lowering rates is something called the JOLTS report. And that measures job openings. And the flaw in the JOLTS report is that, my company is licensed in Minnesota, Wisconsin, and Florida. And if I'm trying to hire a processor, and in our industry, a processor might also be called a transaction coordinator. So if I'm going to go out on ZipRecruiter or Indeed and post that one job that my company has opening for, I might post it as a processor and as a transaction coordinator, and not just in Minnesota, but also in Wisconsin and Florida. So my one job could look like it's actually 6 jobs.
Yeah.
So I think the JOLTS number has been coming down, but it's still overstated.
Okay. Okay. Good perspective. And people are still fearful, I think, right now to buy because of rates.
To a certain extent, it's been long enough now that it's sort of expected. Like
norm?
there's not as much sticker shock
Okay.
as there was at the end of 22 and early 23, where it's like, my friend just bought and got 3% last year. It's like, you should have bought last year because they're at 7% right
Sure.
now. But it's been at 7% for, long enough where it's for the most part pretty normal.
I feel like every circle at some point that I'm in is people are talking about how they're looking. They are having to give up doing oh my gosh, can't think what I'm trying to say there. The when they're trying to buy and they're waiving their rights to the inspection.
Inspections,
Couldn't think of where I was going
Yeah.
there. The inspection, like what are some of the things around that for buyers that is that going to continue? Just keep us kind of like, what are we going to see here for buyers?
Yeah. I mean, if I was a buyer, I would probably pay for the inspector to come with on that first showing
Okay.
if it looked really good and was priced right. Because if there's, right now in January, we're seeing 2 or 3 offers, 4 offers for most homes that are listed for sale.
Wow. That's pretty good.
In April, it's going to be 25 or 30 offers for that same house.
Oh, wow.
Yeah. It gets super competitive amongst buyers as soon as that snow melts.
So maybe we need to buy now is what you're saying, if you can.
Yes, for sure. It's definitely a much better environment. There's not as many homes for sale, but proportionate to the number of buyers that you'd be competing against, it's much better situation right now than it will be in the spring. And a lot of realtors I've talked to said like the spring market's already started because so many people know how competitive it gets. They're trying to get out ahead of that.
Oh,
Uh,
wow.
that piece of information there that you have given, like it, you know, it may not seem perfect right now, but in comparison to what it might look like in 2 or 3 months, I've used that with our clients a number of times of like some perspective around what the current situation is. That's a good one.
Yeah.
Very good.
Yeah. And you mentioned rates, and it's funny you mentioned that and whether people are going to buy and what the market's like. My son is married and they live in an apartment, and he's been married a year, but they would like to own a home. And now that they both have pretty decent full-time jobs, they've been looking, but they've been hesitant because of mortgage rates and wondering what's going to happen and thinking, oh, the Fed's going to keep lowering, so we'll wait. And my wife and I also, we want a home where we can age in place. So we've got a split level. We want a one level home, which is hard to find. I'm going to talk to you about that. You need to help me. Yeah, we want a one level home where we can modify it to age in place.
Yep.
So, but we have really good, we have 2.9% interest rate mortgage on our current home. So we're like, wow, we hate to give that up. But your phrase, date the rate, interest rate, but marry the home. So if you can find the home you want and get into it, then rates will maybe eventually come down.
Yeah. And the other thing too is if you forget that we know what's happened the last couple of years. If you're to go back to college, Econ 101, and the professor says, what would happen to the housing market and if interest rates went from 3% to 7% in a 24-month period? Everybody would say there should be some kind of a correction or a crash, right? Because the costs just doubled.
Yeah.
Well, we saw a single-digit appreciation while that was happening. So that just is another sign that it's like there's just not enough inventory existing or being built.
Right.
So the concern with people like your son and his spouse is if they wait for rates to go from 7 to 6, that same $400,000 house, people are saying, what's the payment going to be? And so if the rate goes from 7 to 6, that $400,000 house probably be $425 when rates do come down because people write their check every month for their payment, not for their rate or not for the home's value.
Right.
People make decisions based on monthly payments.
Yeah,
That's true.
absolutely.
Good point.
All right. What else, Jay? What do we need to know?
The other thing about inflation is that even though it's coming down, it's cumulative. If you think back to college again, go there again, and it's like the freshman 15.
Oh yeah,
familiar with that, Jay. Thanks.
Yeah. New employees here have that same issue.
I'm speaking from personal experience. So I had the freshman 14 or 15. But even though like that was a 7% increase in my weight, I've gained about a pound or so each year the last 20 plus years. It fluctuates up and down, but it's still cumulative. So even though like my weight's only fluctuated 0.5% a year, it's still adding up over time.
Right.
And that's how inflation is. And so that's even if we have a lower inflation, it's still not great for the consumer. So they've got to stay invested and out earn the returns that they're getting against inflation.
Sure. Okay, let me ask you maybe a tricky question, but I don't think so because you're way smarter than me. I think about all these boomers that are, transitioning in their life to potentially an apartment type situation, potentially assisted living, whatever it might be. So it seems like that would be clearing up and making room for new people wanting to come in and buy their homes. Is that impacting? Is that a factor in any of this?
It's going to help a little bit, but not enough.
Okay.
Yeah.
Interesting.
Because we talk about all the time about what big numbers, that is and how seems like that would play an impact.
11,000 people a day in America. Actually, it's 11,200 every single day are hitting age 65 and will for the next 4 years. And they're building assisted living homes and care facilities and senior living like crazy. Everywhere there's open space, they're building these facilities and they're filling up, and there's wait lists. I know because my parents are in long-term care assisted living, and we rented out their 2 houses, but they're on a farm. It's a small town. It's a little different. Eventually they will sell. I would think eventually that has to impact maybe it's too spread out.
Well, I think people are going to want to age in place too.
Yes, like my wife and I, we want a one-level home so we can age in we've seen what needs to happen.
Yeah.
Yeah.
Just so you guys know, I want to play bingo in the and be with all my
Totally.
friends, and we'll have luau's and whatever
Yeah,
else.
sure.
Not aging in place.
Sure,
Get me
you're going to
into-
get Margaritaville.
That's right.
They
Get
have
me in.
the 55 plus Margaritaville communities have assisted and independent living.
See, there we go. That's
They're
what I'm
popping
talking.
up all over the
So
U.S.
while he's aging at home, I want to be where the party is with all the people. We probably derailed you there. I don't know if you had something else.
No. You're 100% right. There's a lot of people that are aging, and that'll eventually be either passing or going into assisted care, but it's still not enough. There's still, I would say, too many. There's just still more 30, 35-year-olds that haven't moved out yet that will quickly absorb all those properties.
Sure.
Any advice for those parents that can help their kids keep on moving out as some of the things that are coming here?
I think a lot of it is, and we've maybe talked about this in a previous episode when we talked more about reverse mortgages, but one of the things that people want, or a lot of people want, is for their house to be the asset that gets passed down to their children.
Yeah.
And traditional way to doing that is they die, and then the kids sell the house and split what's left over. But if I'm a grandparent right now and my house is paid off and I've got 3 grandkids, instead of waiting for me to die for them to get their inheritance, I could take out a reverse mortgage and give them 20% down for their first house. And then I can go to the housewarming party as opposed to being in my grave to see them in their first house.
What a good perspective there with.
Yeah, that's a great idea.
I know you've shared it, but you did, using it, kind of applying it back to what we're talking to today, being able to offer that down payment and be a part of it versus the passing of, passing it on when you can't enjoy seeing some of that.
Yeah. And there's a ton of equity. Right now in the US, there's $37 trillion in home equity. 91 million homes are owned with a mortgage. 35 million are free and clear. And so if you're in this market right now where it's super competitive, cash offers generally tend to rise towards the top of the heap. If there's 30 offers, if they're cash, they'll be put near the top to look at the other terms too. So if you're a parent who's trying to help their kids, I could see a situation where the parent takes out a home equity line of credit, short-term in nature, and offers to pay cash for the house, and then their kids could just refinance and pay back the home equity line of credit after closing. So that's another creative solution in today's market to get your foot out in the door and out ahead of the competition.
That's why you want to work with a professional. All the
there you go. All the
strategies.
strategies.
Exactly.
Yeah, that's great.
We had a situation in our neighborhood that we think that was the situation that the parent had done something like that. Anyway, I think that it didn't end up working out because there's been a home that has yo-yoed in pricing. And so that's was the assumption that something like that was going on.
Yeah, there's another creative company called Knock that we partnered with. What they will do if you're trying to move up this spring, they will write you a cash offer on your current home, and it's roughly 60 cents on the dollar. So if you're going to list your house for $500,000, the offer is only going to be $300,000. But they give you a 6-month window to get full price. So your realtor is still going to go out and list it at $499.9 or whatever that is. But the reason we partner with them is their cash offer allows us to offset their current mortgage payment because their house is sold non-contingent. It might not actually close with that buyer, but if it doesn't sell in 6 months, they're going to buy it for 60 cents. But it allows us to be able to exclude that current mortgage payment if they needed to move up and qualify for the next one. So that's a pretty cool program that we've done a couple of those this year. And it's just super helpful for people that fall in love with a house, which, a lot of people, it's like, oh, we're going to wait till May or June to look. And then it's like, they look on Zillow or they look on realtor.com and see like, oh my gosh, the dream house is like, how are we going to figure this out? So there's some tools in our tool belt that we can help to make things happen.
Oh, that's great.
That is. I feel like most people I know watch Zillow like regularly. They know everything that is going on in their neighborhood or around the community as it relates to houses. And so then somebody will be like, did you see the house on X, Y, and Z street? Yeah, it's gone. Or it's this, or it's that. Like everybody knows what's going on with the market right now. But these tips are, I think, so fantastic that makes you think a little bit more creatively about what you can do and what's possible.
Yeah, I didn't even know there were all these strategies to utilize and how you can utilize them to make your goals, achieve your goals when it comes to your mortgage or a home.
Yeah, and another thing to touch on is just the overall economy, and credit card debt in the U.S. is over $1 trillion right now for the first time. It just happened a few months ago. And if there's people that have racked up some debt, but they also are probably sitting on some of that $37 trillion in equity, one of the strategies that we're working on right now with people planning to move like later this spring or summer is if they have consumer debt like credit cards, etc., we're rolling those into a new home equity line of credit and paying them off. and that boosts their credit scores depending on how much debt they have and what their credit scores are. I could shoot their scores up 20 to 100 plus points. And when they go to get financing on the next house, they've got a 760 credit score instead of a 660 credit score. So if you're listening and thinking about making a move this spring or summer, and you've got some consumer debt built up, it would be super smart to knock that stuff out with a home equity line of credit. And that should instantaneously pop up your scores, depending on where you're at, quite a few points.
Sure.
Jay, you're giving such good advice today and great like little nuggets that people might want more from you. Tell everybody before we wrap up, and I know you have a few more points that you want to make today, but just tell everybody again, like what you do, because this can be confusing. Like, where do you fit into everything, and how do they get more knowledge from you?
Yeah, so you can go to our website. It's www.jaydacey.com, JAYDACEY.com. That's the best place to go. My email is jay@jaydacey.com. And then if you want to give us a call, 651-315-7681.
And are you on social media? I mean, I know that I've seen a few things from you, but are you giving this type of information out there anywhere else, or is it best just to do a call with you?
It's best to do a call because everybody's situation is different. We try and post a little bit on LinkedIn, a little bit on YouTube, just to kind of put some crumbs out there. But it's definitely like, because your situation is unique, it's better to, talk to a professional than to watch a bunch of YouTube videos.
And then where do you fit into the scope of things? People have a realtor that they work with. And then where do you come in?
Yeah. So we handle the financing for single family up to fourplexes. If you're looking to buy an apartment building with 12 units, we don't help you with that. We have somebody that we'd refer you to. But if you're looking to buy or refinance a single family condo, townhome, et cetera, that's where we excel at.
Excellent.
And you have a team around you. It's not like just you sitting in your office. So you're well supported here. And you even told me you're actually, anticipate more activity coming. And so you staff up when the world looks like that as well. So
yeah, we're very optimistic, very bullish on the housing market itself. But also if rates come down, there's going to be a lot of refi opportunities for people out there. And even if rates don't come down, there's still a lot of refi opportunities for people to take advantage of their home equity and cash out. And we're seeing a lot of people that are exploring purchasing their retirement home earlier than they expected. Like if you're going to retire in Arizona or Florida or somewhere down south, we're seeing people in their 40s and early 50s buying those properties today and putting them on VRBO or Airbnb and helping to subsidize the payment on those. And then knowing like it's going to be cheaper for us to buy a retirement home today than in 15 years or than in 20 years. So we're just seeing a lot of that as well.
Another nugget in there.
Smart.
I know.
That's another great idea.
See, all we have to do is just sit here and look pretty while he just keeps rattling off the beautiful things.
Yeah, that's correct.
What other things do you have that you want to share with our listeners today?
As you mentioned about the aging population and will those homes be the supply that's needed? The numbers are, we need about 1.9 million new homes to be built every year to keep pace with the demand. And right now we're seeing 1.3 to 1.5 million homes being built. So it's just another talking point as to why we think that there's not enough supply, is because there's so much demand.
So why are they not keeping up? It just is not even realistic that you can close that gap, or what's happening? There's not enough land, like where they need them. What's happening?
Yeah. I mean, if you pull up the stock prices of publicly traded companies that have been around forever, look at what their stock prices did in, 2017, 18. It's like they went from $80 to 80 cents. And so the level of economic burn that so many developers and builders had during that great housing crash, they're still kind of licking their wounds a little bit from that.
Okay.
And also the cost to build today is higher, and just the red tape of getting permits and everything, like everything's just gotten more difficult for builders and developers to get things approved with the city. Like it seems like every development's got 12 angry citizens showing up at the city council meeting to say, don't build that, so there's just a lot more red tape to cut through for them. And the financial returns aren't that great with interest rates being high too.
If I said to you, should we add on or do we move? What's the right answer?
I would say if you've got good neighbors and you like your house, it's probably better to add on than to move, because most likely if you have a mortgage, it's at 2.5%, 3%. So I would add on if you're happy with the bones of the house and you can make it work.
Okay, perfect. Anything else that you want to share today?
I think we've touched on a lot of things. And again, just super bullish on housing in general, and also on the fact that interest rates are going to be coming down a little bit. It's not going to be 3% like we saw in 2020, 2021, but if we see rates at the end of the year starting with a 5, I think that'll get a lot of people out of the parents' basement and into a home, assuming they can find one.
Yeah.
Well, I think that we've had one heck of a show today, thanks to Jay and his knowledge. And if you do want to explore and you are in some of the positions we've talked about today, Jay is just a fantastic resource. Do you want to go through your contact information just one more time for people?
Sure. If you want to give me a call, it's 315-7681, or you can visit us online at jdac.com.
All right. Well, great show today. Nikki, Jay, a lot of great information, a lot of great tips for us and for our listeners and viewers out there. One of the best shows ever, really.
I agree.
A lot of people have been, wondering what's going to happen with the housing market. So many people I know, including my wife and I and my son and his wife, really watching it closely.
Yeah.
So, Jay, a lot of great tips and information today. Nikki, great show.
Let me bring up just a couple more things before we wrap up. We are really kicking off the year with a number of events with Paladin Financial. And so we have some events coming up for both clients and non-clients. We have our webinars that happen on a quarterly basis. And so on February 5th, we have one coming up where we're going to talk a little bit about annuities and give some more market updates from a financial perspective. And so you can always go to our website to find our events that are coming. And so that's paladinfinancial.com and go under the education and events section. We also have a live event on March 10th where we are going through taxes. Of course, everybody wants to talk about taxes. Everybody is going to be at that one. So make sure you get your seat there, but go to our website. We're also in the community on a regular basis doing events at local restaurants and other community places to make sure that we are continuing to share the information. So thanks again for being a partner with us, Jay. We certainly appreciate it. Great information. And if you want to set up an appointment with Jay, he gave us information. We'll also put it in our notes section. And then if you're looking to contact Paladin Financial, 651-842-8406. Thanks for joining us again.
Thanks, Nikki. Thank you, Jay. That does it for today's episode of Paladin Financial Talk.